Good morning, everyone. Welcome to the Daily Trader with Kevin Hinks. I'll give you about 10 minutes. We're going to look at a macro wrap-up of the economic data we got today, and then we'll look at two practice trades in two important high-profile names that we're looking at. Amazon today with news out about new ventures that they're getting into, and then we'll look at Tesla, a name that, well, is in the news almost every hour, not every day. These days. So first, let's get to our macro minute. PPI today, the look at inflation from the producer level, came in, frankly, warmer than expected. There's two things about this number. Number one, all the year-over-year numbers rose. The year-over-year headline PPI rose from 1.8% to 2.4% year over year. The ex-food and energy, the core CPI, rose from 2% to 2.2% year over year. And the core plus trade services rose from 3.2% and revised to 3.3. That rose to 3.5%. So you can see inflation has, at the producer level and as well as yesterday's CPI data, has firmed up, plateaued, and has actually started to move back up. That's what's got the bond markets nervous. That's why the yields have been up this week, although this morning the current yield sitting at 4.41%, basically down slightly on the day. Why? Well, the market is selling off, right? There may be a flight to bonds at these levels of yields and a protection if you think that the market is not going to stay here. And we'll talk about that at the end of the show. But mortgage apps were relatively unchanged. The composite up 0.5. Jobless claims, 217,000, a bit lower than last week at 221. And the last thing today in terms of economic events, Jerome Powell speaking at 3 p.m. Eastern today. I would expect him to make some comments on what yields have done since he's lowered rates 75 basis points. Yields have rallied. Bonds have sold off and yields have rallied. So we'll look for commentary on him and how that moves the market. All right, let's get to our trade today. The first one we're looking at is Amazon. Now, the interesting thing about Amazon, if you've been looking, it's had a good earnings season. It's rallied back over $200 from about $185 when their earnings came out, $187 range. But the news that Amazon's come out with the last 2 days. First one, they debut what's called an Amazon haul, which they're competing with Temu and Shein for under $20 discount everything. Right? They're going to sell a bunch of goods and apparel and inexpensive clothes under $20. Like I said, it's called Amazon Haul. You can do it only through the mobile app is where you get access, though that caters to younger shoppers, as you know. They advertise crazy low prices with a plethora of goods, free shipping on orders over $25 or a $3.99 shipping fee. Not only that was yesterday that they announced that. Today, they announced an affordable telehealth service for Prime members with low upfront pricing. So it's interesting. They're expanding their retail into apparel footprint, competing with the low price offerings, and now they're getting into telehealth. They offer a pay-per-visit telehealth for 30-plus conditions. It expands to Amazon pharmacies and fast, free medical delivery. So all these things that Amazon is slowly but surely getting into telehealth and the healthcare world through inexpensive ways to do, less invasive, less, they're talking about ED and hair loss and different things like that, kind of the low intensity conditions that you may have. But Amazon with two pretty big news stories. So the trade I looked at here, because it's important that you understand the market has rallied quite a bit, and it certainly can correct here. And you always, in the two stocks we're going to talk about today, Amazon and Tesla, they are susceptible to a global market sell-off. You always have to be prepared for that. Why? Well, they're in the major indices, right? They're in the NASDAQ. They're in the S&P. So you always have to be prepared for what the global market's doing, not just them. So the practice trade we looked at in Amazon was a cash secured put. And as you can see, Amazon's trading around the $212.50 range. It's currently trading $212.54. Well, the practice trade I looked at here was the selling the December 6th. So going out 22 days, 3 weeks, and selling the 200 put. Just, 200 put. Now, you can turn this into a put vertical if you wanted, but this is a way that Amazon could correct, and you still could be profitable if it stays above the 200 level. And also, if you wanted to buy the underlying below $200, if you sell this put for around $1, I think it's trading around 95 cents right now, something like that, you would actually buy the stock for $199.05. So your entry would be lower than, let's say, if you just put in a $200 bid, good till cancel. So a cash secured put. Now, as you know, it takes a little more money, a little more margin to do that. The way you can save on margin is by making a big boy put vertical and hedging and cutting that off. Maybe making the 200, 180 put vertical is another way. But if you wanted to just do the cash secured put, you could in a stock like Amazon. Okay, that's our first trade, a cash secured put in Amazon. Now our second trade, Tesla. Now Tesla, like I said at the beginning of the show, it's in the news every hour, not every day. And a lot of people, if you read some of the periodicals and you read some of the information, Tesla is really, some are really doubting this last move up to these levels because of exactly what Tesla, why did it rally? It rallied for political reasons, remember? And it rallied because Tesla may now have most favored nation status with the Trump administration, and and the Department of Government Efficiency that Elon Musk is going to be involved in, and he may be the busiest man on the earth. And how can he take care of all these different things like Amazon EV cars and battery storage and batteries and charging stations and robotaxi and robocab and all these different companies. So there's a lot of things that Elon Musk is involved in. Can he do all this? Well, Tesla traded as high as $358. It's now under $320. So that may give you an opportunity to start participating in the stock on the downside. You could wait and have it go further. This is if you think that the move from up to 358 and now back down below 320 is a correction that you want to be involved in. If not, this is not the trade for you because you're taking on some deltas here. We want to buy the December 6th. We're staying in that expiration. Buy the 320 call, sell the next week's November 22nd 340 call. And that's just a diagonal that gives you about 24 deltas long in Tesla. And like I said, this is you're accumulating long deltas on the downside here. You got to be careful what the global markets are doing. You got to be careful what Tesla itself is doing. I put it in there at 1310. It's probably trading 1280 now. The stock is sold off slightly from where we put this trade in, so it's even cheaper than it looks on the board. But as you can see, if you want to play Tesla on the upside, this is because it's a $20 call vertical. Remember, Tesla's implied volatility is elevated. It's coming down the last day or so, but it was elevated going into that sharp move on the upside. So a call diagonal in Tesla. We're also talking about a short cash secured or big boy put vertical in Amazon on the downside with all the new ventures that they're getting into. And Tesla, well, you can pick out your story that you don't like or like about Tesla and its future. As you know, it's a big active trader that we look at on a daily basis. So a cash secured put in Amazon, a long call diagonal in Tesla are our two practice trades for today. And that is it for today's Daily Trader. I'm Kevin Hinks. Have a great day, everyone. We'll see you tomorrow with another version of Daily Trader.